Hello everyone, welcome to the 10 Line Invest channel. Many of you have been asking me, can you show me the past performance of the stocks that you've been covering so that we can understand how it works? If it had gone up, how do we pyramid, or if it's stop loss hits, when do we exit, and all of this. So I thought going forward, I will take probably a few weeks back video which I did, and I'll show you some of the past performance stocks, including stocks which have hit stop loss, and then I'll also cover one concept video as always and teach you a new concept. So today I will cover the stock video I did a couple of weeks back in the 4th of June, and also I'll teach you market breadth, which is a very important concept to understand if the market will head higher or if the market will head lower. So there are two sections to this video. Do watch both of them so that you understand what I do and you also learn market breadth indicator. So let's get started. So the first thing I want to show you today is the stock video I did 2 weeks back around the 5th of June, and I'm recording this video on a Sunday, so there might be a difference in the performance of the stocks. So the first stock I covered 2 weeks back was Glaxo Smithkline from the pharma space. Now remember, pharma space, I mentioned that this company, the pharma sector as itself, will outperform going forward, and that's exactly what these stocks have done. So GlaxoSmith is the first stock that I covered, and here I covered it exactly in this week, around the 4th of June, so 2nd June. So I covered it on the Sunday, right? So Monday is when you might have purchased a stock. So in case you purchase the stock here, so I'll remove this drawings here. So in case you bought the stock on Monday, what would have ideally happened is you bought, let's say, a first position of, let's say, 5% of your portfolio. The stock then dropped, and now the stock is heading higher. Now, ideally, if you were a positional trader, what you could have done is you should have bought the stock on Monday according to the stop losses that I mentioned. So I would have probably given a stop loss somewhere around here, and you could have bought the stock on this day on Monday, right? And then the stock kind of went down and then it went up. So basically the stock kind of dropped around 3 to 4%, and then the stock recovered and it's finally closed this week up, right? Now you need to remember that the stocks that I cover are purely from a positional basis. Most of the stocks I cover also for investing purpose, right? So in case you bought this stock on this day, you could have done a wonderful thing by buying the stock, buying more on Friday, because I usually tell that if the stock after going up consolidates for minimum 5 days, so 1, 2, 3, 4, 5, 6, 7, 8 days. So here, if you see an 8-day consolidation, then we are close, right? So then what you could do is buy more on Friday, probably make it 10% of portfolio, and then just move your stop loss here, right? That's what you could have done. And so your stop loss would be here, which means your first position, your risk is reduced. And now for this new position, your risk would be here. So overall, you could have probably taken a 5% position here, and then now either a 2.5% position size or additional 5% position size. However you want, you could do it, but eventually you would be sitting in very less risk over here, and the stock is also breaking out with a very good weekly candle after 1 week of consolidation. That's the first stock I covered. The second stock I covered was Astrazeneca. Now again, this is also from the pharma space, and if you remember, I covered this stock again here. So on this day I covered this on a Sunday, and then Monday we opened. So again, Monday we had you could have bought the stock on Monday, and then it went sideways, and again it went and closed higher. So what you could have done is your first buy would have been on the 5th of June, and then your next buy could have been when the stock closed above this on this day, right? So 14th of June is when the stock closed nicely. So you could have added more to that stock, and then your stop loss could have been moved from here to almost here, right? Now that's how you could buy. In case you're not taking a position, you could also take the position now, because still the stop loss is pretty low, and you could also take a 10% position size if you want with the stop loss over here. So that second stock, it's still in profits. In case it dips and if your stop loss is not hit, continue to hold, or you can add further as well. The third stock we covered was Zota Health Care. It was a recently listed company. Again, the stock did very well since I covered it on June 1st week. So again, here somewhere I covered it on this date. Right after closing we covered. So Monday the stock opened gap up, and we had a nice move up and dip down. Now these situations happen, right? Now since the gap up, you could have bought here whenever you want, but let's say you didn't buy here. What you could have done is probably you should have waited for this dip and then bought here as well. You could have bought when the price crossed above the zone as well. Now let's say you just bought the gap up on Monday here, the stock then dipped. You could again have bought more and also converted this position to a swing trading position as well. So you could have bought here more and then moved your stop loss here. Your initial stop loss is somewhere here, and you could have moved your stop loss here as well, right? And then you're sitting in good profits here. So the stock almost went up, almost 20% since that move, right? So if you had bought these three stocks, your portfolio would have moved a decent, at least 2 to 3% in the last couple of weeks. right? So that was the third stock I covered. So try to trail the stop loss. The stock is looking as if there's some selling pressure. So if there's consolidation and if it again consolidates heads higher, you can buy more also. Okay, so that's the third stock. The next stock I covered was Arvind Fashions, which also did very well since I covered. So again, I covered it on Friday, between Friday and Sunday. So on this day, again, there was a nice um, gap up here. So you could have bought the stock on Monday here. But remember, the candlestick was very bad, right? Now, a lot of people, what they do is they sell off the stock when they see a candle like this. Now, remember, a single candle cannot make you to buy or sell a stock. You need to look at a weekly chart, what is the trend, and then buy. Now, here, the trend is just starting, right? So there could be selling pressure, but eventually you do not have to sell the stock until the higher low structure breaks. Now, here also you could buy the stock on this day, and then the stock has been in a one-way move up. Right now, here we not have a clear consolidation, so I would not really add more here. I wait for at least a minimum 5 days consolidation before adding here. But again, here also the stock did very well. So you're almost up from here, almost another 15% here, right? So two stocks, almost 15% up, right? The next stock I covered was Shankara. Now this is one of the stocks that did not really pick up. So I covered it somewhere here. So if you had bought here, you're still sitting in some losses, right? So stop losses have been somewhere around here. Now the next, let's say by chance next week the stock rises. Now when should you add more? You should add more if the stock has a closing above this zone. Now that's a nice consolidation, 2 weeks consolidation. And if the stock closes above the zone, you need to buy more. Why should you buy more? Because the stock is breaking out from a very long consolidation with a bullish candle, right? So there can be a short-term consolidation, but if it breaks out, then you can buy and add more on the stock. And if your stop loss hits, it's simple, just exit the stock, right? That's the fifth stock. The last stock I covered was TPL Plastech Limited. Again, we had a good Friday gap up opening. So again, here we covered the stock somewhere around Friday. So Monday you could have bought. Your stop loss must have been somewhere here. So your stop loss probably is still not hit, but you can add more if you have a closing above levels of 47.5. So, and if you add more here, then you can keep your stop loss somewhere around here, right? So these are the 6 stocks I covered. I hope you get an idea of how you should be, trading. If you're learning from me, how you should be adding onto your positions and etc. So that's the first part of this video. Now, in case you've been waiting for the second part is the market breadth indicator. So let's take a look at that. Now for that, you need to have charting, which is here. So charting is a very good tool, and I use CCI. So I'm going to explain you how to identify the market breadth using this CCI indicator. Now CCI is nothing but a momentum indicator. So, and I'm going to use the market breadth on the weekly charts. Now, some people look the short term, medium term, and long term. You can look at any market breadth. So here I'm looking at the medium term market breadth, which is the weekly chart. So I'm looking at how many stocks are actually doing well on the weekly time frame, and if the number of stocks which are above CCI 100. Now here what I'm using is weekly CCI greater than equal to 100. Now in case you don't know how to create this, you have to click here and here search for CCI, select CCI, and then change the number to 34. Right, and then here so latest choose weekly, and then click on this number here and say greater than equal to, and here you just change this to 100, right? And there you have it. So that's a simple one-liner. I'm going to delete this for now, but if you run this, basically I'm trying to ask the scanner, tell me how many stocks are above weekly CCI 100 on the weekly time frame. Right now, if there are 10 stocks last week and this week there are 20 stocks, which means the market is doing well because which the number has gone from 10 to 20. Now, if you run the scan and if you go down, you will see these backtest history here. And here you have the history since May 2020, right? So it's May 2020, we see that the CCI number of stocks above CCI 100, which basically indicates a lot of stocks are above are bullish. The trend has been clearly up, right? And then we had a dip and then we went up again, and then this is the last 2 years we've not been doing that great. Now there have been stocks which have been doing well here. In this phase, we had a nice bull run over here, then again some consolidation. Again, we dipped. Again, we had a good bull run over here. Right now, you can also use this market breadth with RSI, moving averages. Now, I understand CCI very well, so that's why I use CCI to direct this. Now, here, if you see, now how you should use this for your investing or swing trading. Now, in case the stock, the number of weeks keeps going higher and higher, and then the first dip, right? Now, when a first dip happens, that's the point you need to be cautious. Right, because what's probably happening is in 1 week what's happened is probably the markets have started turning around and started probably going down. Now usually when this happens, when number of stocks above CCI 100 drops from 18 to almost here, sorry, here I'm not sure, you have around 600 stocks plus, and here it goes to 580. That's the first time you have to be cautious and you have to probably start reducing your positions and not take too many positions. Now, if you look at even the charts over here, we've seen there's been a steady increase, right? And then 3 weeks consolidation, and then it went high, and again we had consolidation, went higher. Now, do not just sell off your entire portfolio just because there's 1 week dip, right? Now, that's not how you use market breadth. You try to trail your stop losses more aggressively if you see a dip in the trend, and then you try to see stocks which are still heading higher and try to add them if you want to, right? And you have to keep your portfolio risk always in check. Now here, if you see, we had this crazy move up, down, and then again we are heading higher, right? Now, in case next week, if we see a crazy drop in this number, that's the point you have to be probably cautious. Not add more new positions. See how the market behaves in the next couple of weeks, because you have made some good money in this move up. You don't want to give it back, but also be cautious and don't add too many positions, right? Now, this is a simple market breadth indicator that I use. And right now the market is very bullish. Hopefully we continue this bullishness, but that's how I use the market breadth indicator to know if the market is probably turning higher or lower. And when you can club this with the CNX small caps index, you will also see this actually helps. Right now, here is the weekly chart of CNX small cap index. Now let me combine this with the market breadth indicator and show you. Now here, if you see June 2022, we had made a bottom, and if you see here, this is around this is June 2022, so we are here, right? Now if you see here, we were at the rock bottom. June 2022 market breadth was almost at the bottom here, and here we had a nice long wick here, right? Now that's probably the sign that the market is very oversold. And then we had a crazy rally here up, and if you see in September 2022, we probably had a highest point in the market breadth, and we started dipping, and then we again went higher, we dipped. And again here, if you see, again we had a long wick here, March 27th. So March 27th is here, and if you see again, we almost made it the rock bottom, right? Now the number of stocks bullish were really, really low. So that's how you use market breadth combined with this small cap index here, and you can actually take a decision of whether you want to increase your positions or try to hold on to your positions. Now, yeah, that's a short video. That's a short. This was a long video, but this is a short section on market breadth and how I use market breadth. I hope this helped you, and if you did, do let me know in the comments, and don't forget to subscribe and like this video as well. I'm going to leave you here. Until then, I'll see you in the next video. Until then, stay safe, take care. I'll see you in the next video. Bye bye.